In progress.
All right, good day, everyone. Welcome back to another daily analysis with the price action decks, where we go through the charts and tell you basically what we're expecting the market to do, especially on the metals, gold, silver, and dollar index. Yeah, we'll still be going through forex pairs as well. But for today, it's Saturday, another day where we'll go through the previous week's charts and show you the best possible setups smart money traders could have gotten using trading gold. And yeah, starting out with gold, we are on the daily time frame, and basically we started out the week around here. This is the entirety of this week price action. That's the range of this week's price action, and yeah, it was beautiful. And also, we did speak about it on Monday. If you go back to Monday's daily analysis, you'd see where I called wanting to see this order block right here maintain its level, maintain its position. I clearly stated that I did not want to see price trade back into this inverse fairly gap. I want to see this order block hold, and we had a displacement, creating a new order block, which can be referred to as a proportion block. We sent price lower towards our sell side objective on Wednesday. Then after that, we had some rejections. On Thursday, we had a rejection back into this daily CB, which I also called out. Go through. You can go through the previous video. You see me talking about wanting to see price trade back into this level. And if we did that, I was not going to probably trade during Thursday's New York section. Then Friday, I was interested in lower prices. Yeah, but I did say that we might likely get the lower prices, or we might stall and wait till next week for the lower prices. And currently, this is what I will refer to as stalling. I'm still going to be interested in sales until we violate this favorable gap right here on a daily basis. Now, for Friday, we did lots of up and down movement. So go down to lower time frames to see more structures and see possible trades that you could have gotten using smart money concepts as easy as you can. So going down to the 1 hour time frame, just going to zoom in a bit. Going down to the 1 hour time frame, taking out this indicator. We start from Monday. So Monday basically opening, we had a push higher back into that daily order block, which is this one annotated here. I'm going to make it a little bit thicker so we can all visibly see it. So we traded back into that order block on Monday, and we did break below. I didn't get to trade that London section. Why? Because we did not sweep a certain level of liquidity I was expecting, and there were no smart money divergence. So we have had price creating a new high, displacing, closing up, breaking this favorable gap, and it was used as an inverse favorable gap during London. We swept out previous highs, and we had a displacement that sent price towards the low of Asia. Now, the trade setup, possible trade setup that every smart money trader could take advantage of is this one right here, the OT pattern, or you can call it the trade. You can use the premium and discount principle. Now, for this case, we are in a bearish trend. We're in a trending market, right? Bearish trend. Now, we had a break of structure. We'll be expecting price to trade back to the OT level one or to a premium array two, or for those using the Fibonacci levels, you can wait for price to trade back to the golden zone or whatever. Should I say the 61.8 level? And just price trading back to that level. For my case, it took note of this hourly order block right here. Price traded back into that level, which is currently the discount array. Take note, this is a Fibonacci plotted from this high to this low right here. Price retrace back into that order block. Then we had a further push to the downside. Now we saw price running lower and lower towards our daily objective. And our daily objective was met on Wednesday, which I got my first trade of the week. I was not able to partake of any of these, but my first personal trade of the week was on Wednesday. Where price showed key and very nice trade setup. Now, opening at the start of, I'm just going to put up the session chart so you'll be able to understand what I'm talking about. Now, starting out from Asian section, which is the yellow shaded area, we traded, swept previous day's PM section high. The the blue shaded area is this PM section, and we traded and swept PM section high, displacing. Now, prior to the start of London section, we had price running back towards the Asian high, but we did not suit that level. But on the CF, on silver We swept out the Asian high, giving us an SMT divergence, showing that gold is quite weak. And take note of what is happening. Same logic, premium, using the premium and discount principle from the high to this low right here, you can see we had all these above equilibrium price, showing price traded back into a premium array, and we are displacing from that level, creating signature price action at premium level where we'd want to see sales. And now we had the SMT divergence. We had displacement, price breaking below this level. This another block could be your point of engaging from towards sell side objective. Now I have my personal ways of engaging such trades. I have the macro models. I have the inverse favor lookup, which anyone can refer to as a unicorn model. You can also use the mitigation block. There are several out there. You just need one, and you can just stick to that one and trade as much as you can with it. So now that was my first trade for the weekend. We traded lower, sweeping out our objective. Now on Wednesday, we during the New York section went lower. The PM section we tried trading lower, but we didn't take out the PM, AM section, which is New York section low, thereby giving us an SMT because on silver we did take out that low as well. So we had an SMT right here, price displaces, close above this level, creating an order block right here. And on Thursday's Asian section, we traded back into that order block. We're expecting the levels, the quadrants of the order block, and we have had a push to the upside during um, London section. Now, based off this could be your trade. After an SMT divergence, this displacement right here, a retracement back into also can be referred to using the premium and discount principle or the OT pattern, price trading back to discount array, which is that level. I'm going to make it more visible. Now these are the levels, upper quadrant, lower quadrant, and equilibrium price. Now from this low right here to this side, price trades back into discount on below equilibrium. Price trades into this is the PDRA below equilibrium, which is the other block. Tapped in there, that could be your trade entry. Starts below the low, targeting relatively equal lows and also fair value gaps as well. Now taking that out. So second trade of the week for me was on early Thursday. We had the entry during the London section targeting relatively equal highs as well as this uh, imbalance and price. So that was the second trade. Then now we have the third one. Remember on the last weekend analysis, I gave you guys a simple model liquidity sweep displacement, inverse value gap displacement, that could be your entry. And you can see right here, that's exactly what occurred. Then we have the next one. Now, for New York section, that Thursday New York section, we traded back into this level, which is the hourly BC. We failed to fill that level. We created an SMT divergence with Siva also, but that was during Friday's Asian section. During Friday Asian section, we had traded above the previous day's high, but on gold, we had not done that, but we had traded above the previous day's high on silver. We had not done that on gold, thereby giving us an SMT divergence. But take note of what also occurred there. We had a liquidity sweep, total soup right here, displacement. Your objective, since you know definitely we are taking out sell side objective. Now, here's where narrative comes in. You do not just look for a reversal. Most of my students have been asking me about how to know when to look for reversal and retracement. And this is basically what I tell them. It all depends on your narrative now. Now, if you have a narrative that you are bullish, all price movement that are going to be bearish are going to be seen as pullbacks majorly. Now, you're just looking for price to trade back to a discount PDRA to probably send price higher. And that's exactly what occurred here. You see from this low to this high right here, from this low to this high right here, I'm just going to make it more visible. From this low to this high right here, that's the dealing range. We saw price took trade from this level, and this is our discount. I'm just going to take out that stuff. So this is premium right here. That's premium. And we're looking for price. So since we are bullish very well, but we can also engage on a sell trade back into discount. Now looking for short trades back into discount, equilibrium price, or discount period like one, this fair value gap right here on the hourly time frame. Fair value gap right here on the hourly time frame, and also this order block right here. These three consecutive candle to the downside. Now take note of exactly how algorithm moves with precision. We traded lower, not just to a random spot. We traded down to the midpoint of this order block, three consecutive candle. We tested there and rejected and created a low of the, I think, low of the day, or should I say of that section? Yeah, low of the day at the mean threshold of this hourly order block. Now we had the rejections of there, shooting price, sending price back towards this low resistance liquidity one at the upside, right here, sending us back to that low resistance liquidity run at the upside, buy side liquidity, and closing after taking out that price, also trading to the midpoint, consequent encroachment of this hourly fair value gap. We had a pullback and closed the week. Now I'm going to go down to the 15 minutes to show more structures. Those who love engaging the 15 minutes. Now you can see after the displacement right there, for those who trade in New York section, this was another block forming here. Displacement, price trades back. This is another block, breaks the other block right here. We close below this, the open of this two consecutive candle. Now price trades back to the mean threshold of that other block here. Trade entry being around here. The retest of the low stops at the high of the other block. See price had a retracement back to the midpoint of the other block and displaced lower. That will be a safe and clean trade towards objective. Now same with the trade we took on same the trade on Friday after price retested that mean threshold during New York section. During New York section, we had a displacement creating an order block. Take note of how exactly I'm taking note of this level. This is the should I say reaccumulation before the next expansive move. Right here after breaking structure right there, or shift of market structure, or should I say, yeah, whatever you guys want to call it, closed above bodies. Take note, I'm watching the bodies. This turns into another block. A retest of that, and that's our entry. I think this was how I got my entry on Friday. Back to relatively equal as well as midpoint of the hourly fair value gap. So basically, that's all. This week was quite. I had fewer trades. I was only able to take about two trades this week. The first one was on Wednesday, and the second one was on Thursday. And I took one on Friday, very silly one on Friday. But my two major trades were on Wednesday and Thursday. And yeah, it was very nice. And yeah, patient does pay. Stay patient to the market. There's no need to rush. There's always going to be new trading setup. For those who want a screenshot of this, I'm going to hold the stop moving the screen for a minute so you can get a screenshot of the chart for reference or study purpose. Now that's it. So do have a nice day, guys, and trade safe. Before closing this, I'm just going to run through what occurred on the dollar index, which is quite intriguing. Now, probably during Sunday's weekend analysis, I would talk a little bit more on what I'm expecting for dollar index. But yeah, I think I've already spoke about it. I'll be expecting more lower prices. Yeah, that's my bias. I want to see sales back to sell side liquidity. If I don't see that and keep seeing higher prices, then definitely that means my bias is strong and I'll be okay with that. So that will be all for today, guys. Do have a nice trading day and not trading day, sorry. Do have a nice weekend and yeah, stay safe.